All right, everybody, welcome back to another video here in the Edge Finder, and today we are going over our number one buy and number one sell currently listed in the Edge Finder. So to start off with, I'm going to remove these neutral biases. I was taking a look at this earlier, and we have two very bullish biases, both with scores of +10. We also have two very bearish biases, also scores of -10. So we've got a few different options here, a couple different ways we could go with this. Probably going to stick with currency pairs like usual, so probably not going to take a look at oil. And I do like including a US dollar pair in there, and this is our only US dollar option. So I'm thinking Aussie USD and Pound Aussie are going to be the two assets that we are breaking down in today's video. But before we get into those scanner breakdown pages, let's check out the COT data, and then we're also going to check out retail sentiment to see what retail traders are long and short on at the moment. But yeah, here's our COT data page. This is smart money traders or institutional traders. This is what they are buying and selling. And I know that we're looking at the Australian dollar, and right now COT is very, very short on the Australian dollar. We're also going to be looking at the US dollar, which they're kind of 50-50 on at the moment. We're going to be looking at the pound as well, and they are definitely, they're favored long on the pound right now. Not by a ton, 64% long, 35, almost 36% short on the pound, but favored long on the pound nonetheless. And then institutional traders, they are really liking the euro, oil, and gold right now. Those are three things that they are very long on at the moment, and they are not liking the yen. They are shorting the yen right now. Let's go ahead and check out retail positioning, see what retail traders are buying and selling. This is our major currency pairs, indices, and commodities, but I just want to take a look at major currency pairs at the moment. We are going to be looking at Aussie USD, like I said earlier, which retail traders are currently long on. 68% of retail traders are long Aussie USD at the moment. We have four brand new indicators built for TradingView. Introducing the momentum, extension zones, trend projections, and volume spikes indicators. All four indicators work on every TradingView chart and time frame. You can easily see shifts in bullish or bearish momentum. Look and see if price is being overbought or oversold, which could cause a quick reversal. Automatically get a trend line that shows the true trend, bullish trend, and bearish trend based on the most recent market data. Get notified instantly of big spikes in volume to help you find breakouts. All four are available now at a1trading.com and can get set up in just a few minutes. Go check out our brand new line of TradingView indicators today, which is a bearish signal for us here in the Edge Finder. So the fact that the crowd is long on Aussie US is giving us a bearish or a shorting signal here. And then if we take a look at minor currency pairs, we're going to take a look at Pound Aussie. Pound Aussie is being shorted by retail traders. 70% of retail traders, or 70% of the crowd, are short Pound Aussie. So that, again, that is going to give us a bullish bias or a bullish signal there. Let's go ahead and jump back in here. So Pound Aussie and Aussie USD are the two I said we're going to take a look at. And why don't we start off with our US dollar pair? Normally I like to start with the buys, but our US pair is a sell today. And so let's just go ahead and hop in and check out Aussie USD. So here is Aussie USD and all the numbers and data backing up that -10 score, very bearish bias. COT data is a score of -1, and retail sentiment is also a score of -1. Now we just looked at the retail data. I just showed you that the crowd is favored long, so that's giving us a bearish signal on Aussie USD. But when we compare both of these COT reports together, we can see that the dollar, again, it's practically 50-50, so this is a neutral score here. But smart money is shorting the Australian dollar right now, which is why we only have a -1 score here. If they were shorting the Australian dollar and they were favored, much more favored long on the US dollar over 60% is what we score that bullishly. So if this were over 60% long here, and this is obviously very short here, then this would actually bump up to a -2 score for that double COT confirmation. But we're really just getting it from the fact that they are so heavily short on the Australian dollar at the moment. Let's see, we can move right along, and seasonality is also a score of -1. So we are in the month of February, and I can see right here that historically speaking, over the last 10 years, if you were to average those numbers together and took a look at how Aussie USD trended in the month of February, you would see that historically is not a great month for the Australian dollar US dollar pair. Typically in February, it tends to trend downwards. Our trend reading is a score of -2, and we can kind of get a look at what that is, what that's like, by taking a look at our score indicator here. So the score indicator is showing you the edge finder score on whatever particular asset you have selected over the past couple of weeks. And you can see that the edge finder has been giving this thing a pretty solid minus score of -8, -7, -9, even a -12 on February 2nd. So just by looking at this, I can tell that the edge finder has been wanting to short this thing for a while. If we actually want to look at the price chart itself, we can go to price forecasts down here. And if I select Aussie USD, then this is the actual chart. So we can see that it kind of ranged for a minute. January 23rd to January 30th, not a ton of movement. In fact, it was actually maybe a little bit of movement to the upside. But after that, after January 30th, we've pretty much seen nothing but downward momentum as this thing just continues to fall further and further. And our price forecast is showing that it projects that it's going to continue with that downward move. Hop back in the scanner page here. We'll finish up with our fundamental data. We have an economy score of -2, inflation score of -2, a labor market score of -2, and an interest rate score of +1. Those numbers right down here for you are GDP growth in Australia at 0.2% compared to 3.3% in the US, MPMI 2.5 compared to 2.8, retail numbers -4.3 compared to 0.3, inflation currently in Australia, 4.1% compared to 3.4% in the US. Unemployment rate in Australia, 3.9% compared to 3.7% in the US. And lastly, interest rates, 4.35% interest rates on the Australian dollar compared to 5.5% interest rates on the United States dollar. Pound Aussie was the other pair that we said that we were going to take a look at, and here it is right here. So we have a very bullish bias score of +10. COT actually has a +3 score, and retail sentiment a +1 score. So again, we already went over retail. We saw that the crowd was favored 70% short on the pound Aussie. That is why it is getting a bullish signal there. And then again, this is kind of what I was explaining to you with the AUD USD pair. So we can see that the Australian dollar is clearly favored short here, and the pound has crossed that 60% threshold, giving us confirmation that COT institutional traders are definitely favored long bias on the pound. So that's part 1 and part 2. Part 3 here is our recent change, and we can actually compare the data from the last COT report to the most recent COT report. So what we saw there from last COT report to most recent COT report was there is a slight tick up in the amount of long contracts on the pound. So it was slightly more long than it was last time, whereas the Australian dollar is a lot more short than it was last time. So from last report to this most recent report, a little bit of an uptick on the pound. That's a bullish sign. And a big dip on the Australian dollar. That's a big bearish sign. So that's why our COT score is sitting nice and pretty with a +3. Seasonality is a score of +1. So contrary to the AUD USD, if we take a look at the month of February here, over the last 10 years averaged together, you would see that pound Aussie typically trades higher in the month of February. Trend reading is a score of +1. Again, taking a look at the score indicator here, we can see that for a while now, again, it's been getting some pretty solid bullish biases, some pretty solid high number scores here. We can finish up with our fundamental data here. We have a neutral score for economy and a neutral score for interest rates, but inflation and labor market are both scores of +2. So already read out all these numbers for the Australian dollar, so I'll just skip over that and focus on the pound. So we have negative 0.1% GDP growth for the pound, MPMI 0.8%, retail numbers negative 4.6%, inflation 4%, unemployment 4.2%, and lastly, interest rates on the pound are 5.25%. So there we go. Those are all the number data, all the information that we have backing up our number one buy and our number one sell right now in the Edge Finder. I hope you guys enjoy this video. And if you want to check out the Edge Finder for yourself, take a look down in the links in the description below, or you can find it on our website, a1trading.com. We have a lot of free, very useful trading information and tools and stuff on our website, a1trading.com. So if you've never been, go check it out. We have lots of free stuff for you there. And again, if you like the Edge Finder, you can find it on our website or in the links in the description. And if you want a discount on the Edge Finder when you purchase it, you can use promo code A1YT at checkout.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.